Welcome to the WARC Podcast. My name's David Tiltman, and today we are looking at a new piece of effectiveness research, 2 years in the making. It's called the Creative Dividend. It's a monster study from System1 and our friends and colleagues at Effie Worldwide. We're going to be talking about some of the findings, and I guess the really big one, which is that we have proof, if ever we needed it, that media and creative need to be planned together as one commercial growth system. Reuniting the two delivers bigger outcomes and helps growth compound over time. Now, joining me today are the dynamic duo behind the study, Andrew Tindall, SVP of Global Partnerships at System1, and Juliet Heygarth, who leads effectiveness strategy at Effie Worldwide. They and their teams have reviewed 5 years of Effie Award winners to unpack how creativity and media combine to supercharge effectiveness. And now they're joining us here on the WARC Podcast to turn that insight into something that marketers can apply in their day-to-day work. Today's episode is also a video episode, so if that is your cup of tea, and we have a cup of tea on the table.
That they'd see if they're watching on video.
Yeah, plus our smiling faces on WARC's YouTube channel. I want to start a little bit with just the background to this report, because they said it was 2 years in the making. So Juliet, maybe just tell me a little bit about where this piece of work has come from, how you got to where we've got to, and then we'll talk a little bit about the data that's actually in it.
Yeah. We set out with quite a kind of, it was a big lofty ambition to try and unpack the relationship between creativity and effectiveness. But we needed a partner to help us do that because the bank of data that we sit on is so huge and quite complex. So when Andrew first talked about it with us, we were like, the theme sounds great, but actually what do we want to really set out to achieve? And for us it was, let's not add to the theory, let's not add to the noise, let's try and produce something that people can actually use and unpack with the help of the evidence from the Effie data.
And by the data, let's just be very clear on this, is data coming from the case studies that are entered into Effie competitions.
That's right. So kind of Effie competitions, it was kind of 1,200 cases over, I think 1,250.
Also entrants as well as finalists, so it wasn't just winners as well, which is interesting.
Because comparing the more successful with the less successful gave us some quite interesting data points out of that. Yeah. But yeah, so a case that has been through the Effie system, if you've become a winner or you've become a finalist, you have probably gone through 3 rounds of judging, probably 14, 15 pairs of eyes. The juries are a mix of disciplines. So we have media specialists, we have creative specialists, we have clients, we have kind of agency CSOs in the room. The thing to uphold our rigor, which I think is interesting, is we do discuss the cases with everyone in the room, but they score individually. So this isn't about finding a winner that the room agrees on. It's about 14 expert eyes marking it after they've had a broader industry discussion, which is why I think the data that comes out is pretty darn credible, because if someone hasn't backed it up with real world evidence, it will be spotted.
And just be very clear on the actual competitions used within this study. So it was US, UK, Ireland, is that right?
And a smattering of Europe.
And a smattering of Europe.
So this is why I was super interested and why System1 really wanted to partner with Effie on this, because a lot of the current effectiveness thinking comes from the IPA in the UK, the godfathers of effectiveness, Les Binet and Peter Field. A lot of the IPA data, it's a UK organisation, so they're UK campaigns. So when I work with our clients in Europe and US and around the world, you meet people that do not want to listen because, oh, well, look, that's UK. It's
that's
UK
be different. Data. Yeah. Somehow the UK is a completely different market to
Weirdly, Australians completely believe you, which are on the exact opposite side of the world, but anywhere in between, they don't believe you. So, I mean, as a bare minimum, the idea was, could we use the Effie data or that case library data to just reprove a lot of what we know as marketers to work? I mean, we got a lot further than that, actually. Accidentally, we approached it to start off with as a what a creative playbook. And then, to be honest, we discovered the fact that you can't really get there without combining creative media, which we'll talk about. But the data itself, just so everyone's clear, we had a team of people at System1 and Effie going through the actual case studies and quantifying it, turning it into quant data, and creating a database of whether the strategy behind brands, linking the actual assets to the campaigns and testing them with System1's creative measurement testing, checking whether people reported incremental gains in certain brand effects or business results, and turning this into a multi-market effectiveness data bank that represents $140 billion of market share of campaigns. It's unique, and there's nothing else like it in one way, which is it's the first time that that's been done and linked to creative measurement data from a consumer's point of view. A lot of research previously has been, the marketer thought it was an emotional campaign, or this distinctive brand asset was technically used. Where we've moved forward creatively was bringing that, did it make the customer feel something? Did that distinctive asset create distinctive advertising?
And that's using System1's
That's using System1's test your ad data. So one of the hardest parts, I'm not going to make any claim to this because it wasn't me. There's a brilliant team behind all this. Was watching all the FE case studies, the show reels, going and finding those ads and testing them with, I think it was 250,000 people globally, which is like, I mean, just the sheer size and cost and resource that's gone into this thing is insane. And we're handing it out for free.
And just in case anyone recognizes the title, this was a sort of preview of this research was given in Cannes last year.
Yeah, I forgot about that.
With Mauritson. But this is actually the full report. Yeah. And there's a lot more. There's a lot more in the full report than was in that preview. Mark Ritson showing an early view got very popular. Like, those findings got very popular. I was like, I'd like to now do a full book on this. Everyone was loving those core early findings. What more can we possibly add? And I was really I didn't need to be worried. Like, there's 120 pages of absolute gold in this that actually fell out. Not because we pushed for it, because when we were trying to connect the dots in the end, it turned out you can't just look at media or creativity as separate entities. It didn't work. Yet had to combine them, and we had to build new frameworks to get there. And as Juliet said, it's not just more fluffy theory, which there's so much of that in our industry. There's case studies, charts and principles and planning principles that the idea is on Monday, once you've read it over the weekend, I recommend reading it with a glass of scotch over the weekend. I mean, it's 120 pages. You might get to quite a lot of scotch.
Exactly.
You can go on Monday and go like, there's 20 things you can call your team up and go, we're going to do this.
Yeah. I think the aim that you could implement findings immediately was really important to us.
Yeah, practical.
Like, there are 120 pages. We simply cannot cover all of that in this podcast. So I'm just going to focus on a few key areas, because I think it's really important for people to sort of understand what the thread that runs through this report is. And we can talk on some of the, your favorite findings and the rest of it. But I think the headlines are really interesting. Now, before we get into the data itself, there's a phrase you use quite early on in the report, which I think is worth unpacking a bit, which is this idea of low confidence marketers. Mm-hmm. And I'm struggling to remember the last time marketing really felt like a confident industry.
I don't think it ever will again.
It's taken a bit of a battering. But what did you mean by low confidence in the context of this report?
Well, Effie, and I think it was Juliet that actually pushes on this. If we're going to do effectiveness research, we've got, I think this is kind of what Effie stands for. It's got to be useful for the people that are practicing effectiveness. So we did research before the research. What kind of lives do we live? I have no idea. It's tiring, David. We interviewed, I think it was 400 global marketers about what they were struggling with and the blockers. And we didn't set out by going, we need to find low confidence. It was like a very long... I actually set out by going, I don't think everyone's actually read what we assume is common knowledge.
Yeah.
Like, list out what you reckon is the drivers of profitability, like Paul Dyson's research. I was really interested in, like, no one actually knows this stuff anyway. But that's not what we got to. We got to, there's a massive lack of confidence in not only proving effectiveness... and being effective, but creativity's role in driving that impact. And then the great thing was that we found, I mean, that's a great tension. Like, people aren't confident in their jobs. And as you said, I actually reckon it could be worth us doing that yearly and seeing that trend.
But I think marketers are generally feeling not full of vim and vigor in terms of confidence. But what was interesting when you go back to the data, the thing they're feeling least confident about is creativity.
Interesting.
So short-termism, they're worrying about loads of stuff. True, but at the top of the tree, it's the power of creativity. They kind of know it. They know it, but doing it feels risky.
This is the thing.
Buy-in.
This is the thing we find a lot. The sort of say-do gap, you can. It's very easy to be in a room of marketers and go, yes, we believe in the power of creativity, but standing up in the boardroom or getting on a Monday morning going, right, we're going to commit to this is really...
And it changes marketer behavior, because you also look at the low confidence group rely more heavily on reporting short-term digital metrics than business results. So it physically changes the game. If you're a lower confidence marketer, you then rely on... it's you're not a low confidence marketer. You probably work in a business with low confidence in marketing.
Yes, that's
exactly.
it.
So then you have to start... Yes, I'm not like preaching or like, look, you low confidence marketers, that's not a thing. It's about where you work. And then you start relying on these like impressions, clicks, data and stuff like that, not market share profit. And then you remove the ability of marketing to do anything to work in the first place.
It's a vicious circle, isn't it? It's a vicious circle.
And that's what we get to as well in the research, where we get to this concept of great creativity needs reach. But if you don't have the confidence in the creativity to start with, you're never going to back it with enough media for it to work.
I think there's a real thing around defending your work rather than being on the offensive about creating kind of stuff that you believe is going to work. And when we looked at the marketers that were working in a more confident environment, they were far more likely to invest in pushing for brand effects, not just the short-term effects.
Yes, yeah.
Well, let's get... that was the research before the research.
Yeah,
so.
but also, last point on that is... I think it's also... I also think it's because what does creativity even mean? So,
wow. Yeah, okay.
We all talk about, creativity is a 12x driver of profit, which, is Paul Dyson's work, which we all beat each other over the head with. What does that mean? And people accuse... this kind of research of boiling down creativity into like simplified outputs. Like in the research, we talk about the measured emotional response to it. But if we don't get to some of those outputs, I don't think we can have a solid enough grasp on creativity for it to be useful to anyone.
I'm going to come into that when let's get on to the creativity stack, because I think some of that is a really interesting sort of not dilemma, but where if we talk about how you use this, it starts getting interesting. But let's talk about some of the key findings. So let's start with what you call the creativity stack. Now, how would you like the stack? There are 4 elements within it. We'll go into what that is. But is this a sort of code for great creativity, or how would you describe the creativity stack?
It is a worldview on advertising. I think we all operate within our own worldviews of advertising and marketing, and that allows us to do our jobs. This is a worldview of advertising that actually looks at the outputs of creativity. It's not, crucially, because what F is so great at is that, you have to talk about the insight and the strategy behind it, and there's all these amazing creative teams that create these advertising. We're not telling them how to do their jobs. We're not talking about uniqueness or how broad entertaining idea or anything like this is, or the insight itself. What we're talking about is an output of creativity. So we break it down to 4 stacks, which is how emotional, distinctive, consistent, and what we call showmanship, how entertaining and broadly interesting it captures broad attention is. And it's a framework for you to help guide, assess, and improve advertising.
I think that's the key. For me, it's a tool that marketers can hold in their heads, even when they're developing creative work or they're thinking about whether to move on or how to evolve something. There's a stack of 4 things you can flick through in the Rolodex that is your mind to kind of go, how are we performing against these? What are we doing?
Completely, like a creative review, or if things haven't gone well, you can look at a campaign and go, oh, well, why? It clearly is based on an emotional insight. You know, maybe you've done creative testing, maybe you haven't, but I reckon this makes the consumer feel great. It's littered with our distinctive brand assets. Oh, it's very entertaining. People are sharing about it. It's growing fame. Well, it's not consistent with any of our other stuff. So it allows you to understand and improve and predict the impact of advertising.
So let's just repeat them. So there's emotion, showmanship, distinctiveness, and consistency.
Yeah.
I think, I hope that many of the listeners or viewers of this podcast know what we mean by emotion, like driving an emotional response. The one that's really interesting to me is showmanship, because that's an interesting term. So just define what you mean by that.
What's also worth talking about is this research is built on other people's thinking. Like I don't think it challenges much common knowledge. Apart from some stuff on differentiation for if Byron Sharp, if you're listening to this one. Showmanship is built on the thinking of Orlando Wood. So he's researched for years the idea of basically analysing kind of what one of the ways Paul Feldwick talks about advertising in his book, Why Does the Pepper Sing? Great book. I actually read it every January because I think it's a really great reset and a way of thinking. Again, another model of thinking about the inputs into creativity, to be honest. So Orlando then went and looked at the types of creative features and the creative style of showmanship. Showmanship's the antithesis of salesmanship. It projects a certain personality. It entertains. It earns attention. It doesn't assume attention. It's not based on rational persuasion. And crucially, one of the 4 key pillars of our stack is that it can create emotion, but it also attracts attention and creates trust and fame. And we prove that in all the data. So why it's crucial is that it's a key way of compounding advertising. If you're just using salesmanship, you're only ever going to be talking to people who are already interested in your brand. Good marketing strategy, focus on new customer penetration. So showmanship allows you to achieve that. But if anyone's really interested in this kind of salesmanship and showmanship, and you could get into the dizzy heights of left and right brain, I'd recommend Orlando Wood's book, Lemon.
Yeah, I think of it in really simple terms. Again, if I was a marketer, I think about what am I bringing to the consumer that is entertaining or engaging? How am I bringing that to them so that they want to spend time with me and my brand? If you go to the back of the Creative Dividend, there are some cases, golden grand winners that...
They're all great for showmanship.
Yeah, and funnily enough, I was flicking through them this morning prepping for this, and the thing they all have in common is that. There isn't one campaign that makes me smile. Even when I know it really well and I'm reading about it, I'm like, oh yeah, I'd forgot that's.
Yeah. See, this would bring joy to Orlando's heart. He'd say that you could maybe fall behind and not being consistent, or you could actually not be the most distinctive ad. But showmanship is a game changer often because it compounds.
This is really interesting. It's just come to a conversation I was having yesterday with a CMO. I won't say who, but we're hoping to bring them to Cannes. She put the same brief out. She got a multi-market team all over the world, but she put the same brief out to lots of different markets, and they all interpreted it in different ways.
So going for showmanship, not consistency there.
It became like a multi-market test of kind of what works, because they had really good sort of... and what they found was the ones that had sort of ticked the boxes of emotional response, lots of brand assets all over, did okay. But it was the ones that sort of turned the creativity up to 11 and were like, just had that sort of sense of showmanship.
Yeah.
That they saw really, really big returns from. And I just, when I was reading the Creative Dividend, it just roots us again in the importance of what Paul Felwick calls the artifact, the actual execution of the creativity itself.
Yeah, I mean, so a few interesting points for that. One is you talked about surprise and delight. Before I read any of the effectiveness literature and became professionally insufferable, at Diageo and Bacardi, when I was working, on brand marketing, we would just focus on the strategy was always to surprise and delight in everything we did: packaging, experiences, marketing. So, like at its core, that's what good marketing would be. But also as well, showmanship and consistency are really closely intertwined, because to be consistent and effective, you need imaginative repetition. So Kit Kat, have a break. Yes, it's been a long week. We were in Singapore last week together. Have a break. It's not got boring because they've used showmanship to refresh the idea and keep it interesting. I think it's one of the highest orders of creativity, the use of consistency and showmanship to keep surprising and delighting whilst covertly still building the same insight, idea, and positioning. So it's no surprise to hear that.
I say, just from a mental point of view, if you're not having to sort of rethink the brand strategy every time you do a campaign,
you can focus on other things.
Focus on the actual execution.
And when you think that time is in really short supply, right? That's important, probably more important than it's ever been.
But consistency is probably a massive theme in two of my favourite cases at the end of the book.
We're going to talk about apartments.com
Go on, bring it. Let's talk about an example.
So if the marketers, I wrote them a letter, but they never replied. I feel like I'm about to burst into rap. I was judging the US Effies, and I was in the judging room, and this beautiful case landed on the desk. The 10 years of apartments.com, of how they moved from like 30th in the market to number 2. And for some reason, they were juicing up their media dollars halfway through and then stopped increasing their paid media. And there's this great relationship with revenue and the paid media. They stopped increasing it, but the revenue carried on afterwards, despite them like not increasing it, which is a key driver of profit effectiveness. So we were like, okay, they're onto something here. Then I went and looked at the ads. They all was the same idea around Jeff Goldblum as this mascot for the brand, around the same positioning, the same creative idea, refreshed again and again and again. And they backed it, and with a load of paid media that they were achieving an excess share of voice on. And, that has created hundreds of millions of pounds of market share. I sleep with that case study printed off underneath my pillow, just in case I wake up in a cold sweat in the night.
You need some proof for that.
No, go back to sleep.
Yeah, it's interesting that at its simplest, one of the things I like about that is all the other brands were messing about with search, having a kind of really detailed competition in search. Exactly. I don't dread to think
and
how many.
I wonder who wins now. LLMs have come about.
Thousands of marketers like SEO quick.
Yeah.
And then these guys came along and they went, we're not playing that game. We're going to think about preference. And that's all we're going to think about for a brand effect. And we're going to go hell for leather after that. And then the challenge becomes, okay, how do we execute against preference?
I mean, that is another thing, another key finding in the book around how consumer behavior. I was just with a client this morning talking about this. Consumer behavior has changed. I think this is a key thing for senior marketers to understand. 10 years ago, a lot of our decision making was based on physical availability. You go to the high street to make decisions.
What was in front of you when you were actually physically able to buy it?
And 10 years ago, you were seeing a lot less ads, but now you see a lot more ads, lower attention. You only get them a few seconds. What this fundamentally means is that those kind of strategies that focus on brand building, mental availability, they will win, because a lot of the behavior has to come from the mind of the consumer first.
And we find a lot of this. I mean, so the Side Business School WPP data that found like 84% of 84% of purchases are brands that were in the
first consideration set.
Yeah,
exactly. Yeah. Who comes to mind in the buying occasion? Who is salient?
Yeah.
The strongest brands. Yeah.
Yeah, and never has it been more important.
No.
So we've talked a bit about emotion. We talked about showmanship. Let's just cover off the other ones: distinctiveness and consistency, because these are interesting because they kind of play a compounding role in the research. They sort of maximize the impact of the other stuff. If I'm reading it right.
Yeah. So I would say, and the distinctiveness I would call table stakes. Yeah. What we found in the research is if you juice up your media dollars and you're not distinctive, you don't see guaranteed growth in revenue. So distinctiveness allows media spend to turn into revenue.
To work hard, basically.
It's like an efficiency piece. But and then that's the bedrock of it. And then the rest is about turning that into profit, because the rest is about actual behavior change, not just linking it to my brand. And then consistency. Well, we talked about this at Cannes, didn't we, this year? I tried to go look at the video of that presentation. Where can people find that? Is it part of WARC now or something?
It's on WARC and it's on the WARC. But thank you for allowing me that plug.
I couldn't find my own video. Okay, amazing. If they want to hear me, Les and Sarah Carter talk about it,
that is on the WARC and on WARC.
Amazing. So this idea of consistency is, look, I've drank my own Kool-Aid. I think you could ditch every kind of idea of how branding works, and brand building works, and I think brand building is about familiarity and consistency. The ruthless process of chasing after one or two associations, owning a few category entry points, and owning a few brand assets, and investing behind those and refusing to budge. Mark Ritson talks about this with KitKat. KitKat is the world's best example at doing this. So I think the playbook to consistency around the framework we present in the book, I think is, should transform how marketing teams think about brand building.
There's a really nice phrase in there, which is, creativity doesn't wear out, it wears in. I think there's one caveat to that, which is good creativity.
Yeah, no, I agree. Which is probably what people could rib us on, is that a lot of, if you're submitting to the Effies, it probably is. It's not.
Well, it's worked.
It's worked, so it's not going to be.
Yeah. But also, I think if you keep your eye on the creativity stack, and you've done all of those things right, then you've got probably pretty good creativity that's going to kind of wear in, not wear out.
Yeah, completely.
So there's loads more on consistency. You've got a growing literature around it, but I think it's a very interesting, and particularly at a time when there is so much temptation to change and shift.
Oh God,
and do
more
do
assets, more channels. Shouldn't we be on Reddit? Blah blah blah.
Shouldn't we be paying OpenAI for the world's most expensive banner ad or whatever?
Are they banner ads? Are they banner ads?
Well, it's like little things at the bottom of a post, aren't they?
I wouldn't know. I pay them personally a lot every month to not see
so
ads.
Right. So creativity stack. That's how we're sort of looking at the inputs to good. You then have you take that into the creative dividend itself, which is like a calculation. So just talk a little bit about what that is, and then we'll get on to the final bit.
I can only apologise. There's only 2 equations in the book. There's just 2 equations. It's very simple. So you technically can't ever have I might get dragged out of WARC HQ if I say this out loud. Or they might not let me back in the office at System1. You technically can't have creative effectiveness. You can only ever have creative efficiency. Because effectiveness relies on an outcome, which is volume-based. Mm-hmm. So that really is the scale of what you're doing, i.e. media. Creative efficiency is how you turn that scale into that outcome. So really, creative effectiveness is actually campaign effectiveness. It's a combined factor of creative quality and how hard you've gone after it. So creative dividend is essentially an index of creative efficiency. I've probably lost anyone listening at this point. Yes, please stay with me. So it's judging a campaign across those 4 aspects, crucially, against the category average. I think I called Juliet at one point at Cold Sweat saying none of it's working, because if you compare the emotional response in one category, so the emotional response in dog food ads that are full of dogs, and then compare that against an insurance ad. There's an inherent baseline baked into some categories.
Yeah.
It's more about actually not the fact that some categories can't be emotional. All categories can be emotional. That's what creativity is for. But categories reach a creative equilibrium. You see this in insurance. Insurance is very boring. Geico Gecko came along. Now insurance is one of the most interesting creative categories. So if we benchmark a campaign emotionally, distinctiveness, consistency, and for showmanship against the category average, you then get what we call the creative dividend in the book, which is a index which dances around 1. Technically, it could go up to infinite, I think, and it could go down to 0, I think. But basically, it's the creative quality. It's a multiplier of what effort you put behind that. How creatively is it going to work for you?
But the important thing, as you say, is that is about how hard you're making your media dollars work through the actual creative message itself.
If an ad plays in the woods and no one saw it, is anyone going to buy anything?
Yeah.
I think want to make sure that people don't. It's not necessarily having to outspend consistently from day one.
Yeah.
Again, there's some hope for the challenger brands out there.
Yeah. There's a whole chapter of hope in this book.
You can look at a brand like EOS, who now probably isn't a challenger because they've been so successful. But when they started out,
they've
they
done
sure
very well
were.
in the.
For UK listeners, I'd not heard of EOS before.
No, I know.
Could you explain that case?
Go to the back of the Creative Dividend and you can read it. But essentially what they did, which I thought was really smart, is they aimed at a target audience who they understood so well. And in the first 3 years, what they said is, okay, we can't go for reach because we're up against the Unilevers and the P&Gs and they're like, we can't. What we can do is we can do good creativity by disrupting category norms. But then we're going to focus, their media strategy was about cultural proximity. And I don't know why, but I found that phrase quite engaging. It's like really understand your audience and then pay money in those channels where you can literally buddy up next to them. Yeah. And their media efficiency was second to none. Their tone of voice was amazing and incredibly engaging. And then they understood the behaviors of their audience and where they hung out, and they went to be there with them.
And they were creatively advantaged. They had a very high creative dividend. Yeah. I mean, also we share a lot of frameworks in the book, but the case library in the Effies is full of shit you can steal. Like that idea for a challenger brand in that category is really interesting.
That's really good.
It's a creative efficiency. How are you going to work your media spend harder? And crucially, it allows us to answer the question around, I had an argument with someone around, I think you should I'd rather have the world's best ad and no media spend. And he was like, I'd rather have a crap ad and $1 billion. As an industry, we are not able to have a more nuanced conversation than that.
Yeah.
And I could
somewhere in between.
That is what these tools allow us to start doing. Yeah.
So let's bring that onto the sort of concluding framework, which is excess share of creativity, which takes this idea of the creative dividend and then starts to apply it to this sort of media plus creative world. So just talk through how that thinking comes together.
I will let Juliet introduce this because I was ignoring it to start with as a concept, and you pushed it, right? You pushed me.
Yeah, I did, because I just thought, most of us are familiar with the idea of excess share of voice and what that does. And for me, having a metric behind...
Just in case anybody isn't, let's be very clear. This is a sort of long-standing principle in marketing. It goes back many, many, many years. It's like John Philip Jones or someone like that.
Exactly. Your effectiveness onions.
And it is the principle that if your share of voice is higher than your share of market, then you are sort of primed to grow.
Yeah,
generally.
And I think we were really interested in the idea of figure out, apart from the times 12 figure of creativity, is like how can we prove the power of creative and media when it comes together.
Yeah.
And I always thought, okay, actually it's a way of quantifying the creative dividend. We've given ourselves this title. Actually, what's the mass behind it? And how can we reframe it? It was easy for me to sit there and push on it and she'd focus because I wasn't the one doing the maths.
Yeah.
So I think you had to figure out a way of doing the maths that was robust.
Yes.
Which was hard.
Yeah,
so apologies for nagging.
No, I actually ended up calling Les Burnett and asking for help. And he pushed me on this as well. So what actually happened was I looked at splitting all the cases in this global data set into the creative dividend by deciles. So just creative quality. And that beautifully predicts market share growth, but it didn't predict reporting profit growth. Because you could have a great ad, but you didn't do anything with it.
Yeah.
You know, which we technically call a cult hit in the book.
Hit.
Which, that in the advertising planning matrix, another framework for the industry. So then it was like, okay, of course, well, to have a share of something, and again, Les pushed on this, you have to have a volume. So you have to times it by the media weight. And then all the fucking numbers started to work. So suddenly, it's taking that creative dividend, your creative quality benchmarked against the category, and timesing it by the media support in terms of media spend. So you're getting to the idea of why creativity in advertising is exponentially effective, because and it is. So all the numbers started working, and there's an exponential, very significant relationship between the excess share of creativity a campaign has, the ESOC it has, and profit outcomes. Because if you put more media spend behind a very good ad, it's going to do exponentially more than putting more media spend behind a bad ad. And it also opens the door to a practical approach to marketing effectiveness for once. Well, advertising effectiveness. Like, sometimes we tell people they need to be spending more, and it's like, well, I can't. So, okay, what are you going to do to create a bigger creative dividend? Or, I have a crap ad this year. You know, I've pushed it as far as I can go. If we were going to, as a business, need to see the growth that we saw last year, sadly, because of the situation we're in, I'm going to have to go ask for more media dollars. Yeah. So it allows creative and media to start getting planned
to start planned together and really hook into a company's growth objectives.
Yeah, exactly. Yeah.
And I think there's a good stat here where you looked at the correlation between creative scores on its own and reported business results, and then you found that when you brought the media into play, that combined media and creativity story predicted, I think, something like 60.1%.
I forgot about that stat. There's a lot of stats in this book, David. There's 120 charts. And there was, so I built a model at the very end. Actually, I built the model at the start before I understood. It was a regression model before I understood the framework of ESOC, and it's a messy process writing a piece of research this big, where I built a regression model to try and predict the business outcomes from creative choices and media choices. And yes, if you just put the creative choices into this model, i.e. the 4 pillars of the creativity stack, I think it predicted like 25% of, or explain the variance, 25%, a quarter of all business outcomes. When you then apply creative and media together, it explains the majority of business outcomes, 60.1%.
And there was interesting variation by category there. So some categories, there was a much higher...
It's my favourite insight.
Yeah, mine too. Mine too.
I called my founder for this one. It was a village. You know, there's a village behind this work. I called my founder, John Kieran, and I was like, how come this model can predict all of the business results for pharma, but only 40% of the business results for FMC, I think it was one of the lowest categories, like food, snacking. Well, there's a few things that inherently make a category more exposed or less exposed to advertising effectiveness. Pharma does not rely on physical availability. I need my life-saving medication anyway. And there's not any difference. I mean, maybe big pharma might disagree with me here, but there's not much differentiation between the product itself. paracetamol is paracetamol.
Yeah.
We all kind of know that. There's some brand building gone into like Nurofen, convincing us it's more effective than ibuprofen, for example. But, so if there's less physical availability and there's impact and there's less product differentiation, then advertising campaigns really are going to determine the fate of your brand, because that's going to influence all that behavior. Whereas there's quite a lot of variation in chocolate bars that play to different need states, and it's quite susceptible. I am often walking down the street and see a Snickers.
Think you might want to...
Yeah, I love it, yeah. So advertising it still predicts like 50% of the...
Yeah, but there's more variable. There's
which
more variable.
is a nuance I'd never even thought about before.
But then it's interesting, isn't it? Because you think snacking is an advertising heartland, whereas pharma isn't. So you think what the upside could be in some of these categories.
And then which is why I love last year's Super Bowl. Do you remember when Pfizer did like a beautiful brand building, emotional campaign, which technically only scored like 3 or 4 stars in System1's testing. But the category average, and so the star rating is the emotional response in testing, the category average for pharma is 1. So just on their emotional, they're 4 times more emotional than the category. So then you start to really understand that in these boring categories, the opportunity of creating a creative dividend is even higher.
We're nearly out of time, but I want to ask about one more sort of finding from the report, which I know is a phrase you've used elsewhere, but it's this idea that there are super touch points. Uh-huh. So we've talked a little bit about sort of media dollars, how creativity makes media dollars work harder, but there's still opportunity for getting the right media or getting the right combinations of media within that. It is partly a volume game, but there's other things going on there. So just explain what you mean by super touch points.
Well, Juliet's already touched on this around not all media choices are equal, right? There's different physical qualities of a media channel, like its ability to be targeted. Is it static or audio visual? How expensive is it? How much broad reach can it get in your category? And that impacts whether that channel can create future demand, brand effects reported in the Effie case library, or capture in market demand. So James Herman talks about this idea of future brand and the long and the short. So or capture in market revenue. And we actually found, because again, the Effie data is insane. Like I could probably write 3 more pieces of research size on just that, because you have to tell them which channel you've used and all this stuff. And we looked at whether the average impact of including a touch point in the campaign was on these outputs. And it actually comes from the word super touch points come from Jigmail in the UK, which that we were able to prove with the Effie data. And it's basically, there's a negative correlation between how good a campaign is at building brand effects and how good it is at capturing in-market revenue. Because to capture in-market revenue quickly, you have to be targeted. Yeah. Has to be cheap. Yeah. Which means it's probably static. Whereas to build brand, a media channel has to be wasteful and luxurious. Has to be public. It has to be for everyone.
Video.
It has to have video, high attention, TV, radio, out of on this kind of stuff. Super touch points are the touch points, the media choices that buck that trend, that sit above that trend.
So they're kind of doing both.
They're better at doing both than you expect for a classic media channel. And obviously, it doesn't touch on the scale of the effect, and this is a kind of a global rough rule of thumb. And what I just found really interesting on that kind of finding was, if you look at the super touch points, they're all traditional channels apart from creators. Which maybe is a nice note for us to finish on.
Yeah, that's another podcast.
Yeah, because I am increasingly depressed. I don't know about you guys. We've talked about how will we ever be confident again as marketers, and I think this is why Effie exists as an organisation. Where were we going as an industry? I don't think anyone got into this to be spreadsheet monkeys and chase numbers and clicks and stuff, and that's increasingly where our industry is going. And then there's this breath of fresh air that I think, like in that super touchpoint stuff, where it's like creators, the human, more emotional version of digital. Actually, you can see it pays back and builds brand. And I think hopefully that's those kind of nuggets and these frameworks in this very bloody big book can hopefully help marketers get back to doing what they enjoy doing. And it's kind of what Effie exists as an organisation.
Sure is.
To do.
If you could both just give me a couple of things that you want marketers to do next off the basis of this book. So they've had their scotch, they've read through it, they're phoning their team on a Monday morning. What is it that you think they should be?
Okay, I'll think of one thing, but for different levels of marketers.
Yeah.
Oh, nice.
So I'm thinking of the CMO with, I don't want to go into stereotypes. I'm not saying this CFO is some kind of horrible advertising as a cost, But if you want to go in and you want to hold your head up high and really punch for the investment that you need and reposition marketing as a growth engine, you have got a shit ton of evidence you can use in this book. So for me, that's kind of one thing I would like. I'd like the CMO to have their list of stats and for them to walk slap bang into the C-suite. And then I think if you are a junior marketer or kind of just starting out, use it as a grounding and use the filters and use the frameworks to help you start to think about, okay, when I'm setting objectives for this campaign, am I looking to drive brand effects or business effects? When I'm judging the target audience, do I really understand what I'm looking for? And then creativity and so on and so on. It kind of gives them a bit of a roadmap through the whole process. That's what I'd like them to use it for.
Andrew?
I can't really top that. That's very good. Flick to the end, skip it all, and look for this advertising planning matrix, which is basically how you can physically plan creative and media together, where you basically judge creative on one axis and then you based against a category, and you look at the media support it's got versus category, and you can quickly work out whether and you can do this through creative reviews or creative testing or experimentation, or just looking at what's working in market. You quickly work out whether what your next step is next year to make advertising more effective. Do I need to pause juicing up the media engine because I need to fix distinctiveness? Do I have gold on my hand where if my business puts in another pound of or dollar of media spend, we'll get 8 back? Is it a cult hit? Is it paid noise? Is it a growth engine? Like, that is what I'd reset every year. And that is actually how you go and get that media investment from your business, because you can go, look, actually, imagine the kind of respect you get where you go, look, guys, actually, I don't think throwing another 10 million at this right now is the right choice. Give me 6 months with my creative team to fix X, Y, and Z about it creatively. And then when we can go bigger next time. Or
we can spend that 10 million and get more, get a high return.
High return, yeah. Or, look, guys, this is paid back again and again. It's creatively better than everything else in the market. Now's that time to take that risk.
Lovely. And where can they download all 120 pages of this?
Google the Creative Dividend. It's free online. Or chase us on LinkedIn. We might reply.
Andrew, Juliet, thank you so much. That was a lot of fun. And thanks, everybody, for listening. If you like what you've seen or indeed heard, do follow the WARC Podcast on your podcasting platform of choice. If you really liked it, please leave us a review. Until next time, thanks for listening.